Whoa, this is what a real market reset looks like. Nearly $200 billion, 1.6 million people affected, all wiped out in a single day. It's brutal. It's violent. But this, to me, is a good old-fashioned house cleaning. There is no reason to panic. It's just the kind of shakeout that hurts, of course, but keeps the bull run healthy. And man, yes, the cost was heavy. Bitcoin dropped 12% in 30 minutes. Ethereum is back to 3,700. And the altcoins, Sui crashed 80%, WLD, WorldCoin, tanked 82%, Dogecoin got cut in half. I can picture it. Folks staring at their screens, hands shaking, unable to sleep after that. But yeah, I gotta tell you something. To me, it's just totally normal. So today, I want to break down what really happened, what's really behind this crash. And of course, just a heads up, this is my personal take. It's not financial advice, it's just what I see and what I'm living, because I'm not heavy in leverage positions either. But yeah, I just want to talk about the reason. A lot of people are blaming Trump. This crash, they say, is about his new tariffs on China. And that triggered the stock market drop. Then the crypto market got hit. But no, I think that's just the spark, not the dynamite. It's not the reason behind it. It would be too easy. Last night's crash wasn't one single thing. It was a perfect storm. Three forces slamming together at the same time. That's what I see here. What reasons? The first reason is the market was already a powder keg waiting to blow. Why do I say that? Because too much leverage positions. Everyone was caught up in October hype, borrowing crazy amounts just to go long on leverage positions. The whole market was fragile and just it needed this kind of match to spark, to blow it up. Every time it's the same thing. And the second reason is someone lit that match, started this explosion. Big whales or hedge funds with sharp instincts. They smelled blood. Right after the trade war news hit, they started shorting or hedging big time. Their moves were the first domino to fall, precisely, and it was deadly. For example, before the crash, a whale holding 11 billion in Bitcoin bet on a Bitcoin and ETH pullback. These pros, these predators, they saw the market was drunk on optimism and leverage. So when the tariff news dropped, they just didn't hesitate. They lit the fire. And then the third reason is, and this is I think the big one, when everyone tried to run, the exit was blocked. I'm talking about an exchange liquidity black hole. When the first wave of selling hit, panic orders flooded in. But if you check the order book, where were the buyers? The buy orders vanished. So without enough buyers to catch the sell-off, prices fell off a cliff, triggering even more liquidations. So these three things sparked by the tariff news exploded all at once. The dominoes came crashing down one after another. So that's my theory. But how do we know if this was a leverage player disaster or if it is an everyone is panicking kind of moment? This is where we need the truth detector. The data proving my point. In all the chaotic data, I always look at one chart first. It doesn't tell me everything, of course, but it shows what matters most, whether people's hearts are shaken or not, especially for Bitcoin. That data is the Bitcoin exchange reserve. The Bitcoins available on exchanges. And here is what I noticed. Since mid-September, Bitcoin reserves on exchanges have been steadily dropping. What does that mean? Before the storm hit, the real believers, the smart money, were already pulling out. They moved their Bitcoins off exchanges, locking them in cold wallets. They weren't planning to sell not one bit, whatever happens. And during the crash, reserves, okay, they ticked up slightly, but here is the white part. It didn't last. And they are dropping again now. So what does that tell us? Someone is buying the dip big time and pulling their coins off exchanges. They are not affected by that. This crash reminds me of last August big flush, Back then, the market panicked too. Tons of Bitcoin flooded exchanges ready to be dumped. And this time, barely any inflow. Just a tickle. That tells us two things. First, the market's way more mature now. And then, the diamond hands are tougher than ever. So this chart is proof. Last night's disaster was all about the leveraged gamblers playing with fire, I think. The diamond hands, the one holding Bitcoin as a long-term asset, they were chilling in the stands, watching the show. So that's what I did too. I wasn't affected. It didn't affect my sleep, and it didn't affect my day-to-day. I'm outside, just enjoying time with my family. No reason to panic. My positions and their positions are solid as a rock. This crash was a brutal market cleanse, and it was needed, I think. It's painful. It kicked out the gamblers and reset the market to a healthier state. So it should be really painful for them. But I think the market is now in a healthier state. The market will keep growing up, and we are seeing it happen in real time. And October could still be a thing. I know some folks are still hyping October. I think, they say October's always a big month for gains, and some even pull out models predicting a 21% Bitcoin bounce in the next week. So we can listen to that stuff. I would not bet the farm or my house on it. History rhymes, but it doesn't repeat exactly. And personally, I trust on-chain data more. So what's next now? Simple. We just keep watching that exchange reserve line. If it holds or if it keeps dropping, it means smart money is buying the dip and hoarding coins. And that will be a super bullish signal. But if it starts creeping up, that means selling pressure is still around. And then that will mean that we will have to, keep an eye on the market and just check if the market needs more time to settle. So yeah, that's it for today's breakdown. And what I see here, it's just geopolitics and the traditional markets reacting. But for Bitcoin, it doesn't affect us in the long term. What do you think about this market crash? Do you think it's a crisis? Or do you think it's an opportunity? Did you buy the dip? Are you buying the dip? Drop your thoughts in the comments. And yeah, just a reminder, it's just my personal analysis with my point of view. It's not investment advice. You are responsible for your own wallet, do your own research and stuff, you know that. But yeah, maybe this video will help you. If it did, don't forget to subscribe. I'm Cédric, and I'll see you in the next one.